And with just a few days to go for the budget, there is a growing debate on the India growth story. Indian stocks were a hot bet among international fund managers up until a few months ago, with benchmark indices hitting record highs repeatedly. However, that mood has dwindled since late September in a way. At one point, Indian stocks were considered a serious contender to China in the emerging market indexes. Such ambitions are now dwindling as the market is shaken by a slowing economy and foreign outflow. The rupee's value has dropped to new lows versus the dollar, and economic growth has slowed to a 4-year low. And since the end of September, foreign funds have sold shares worth over $19 billion in the Nifty benchmark, which is poised for its worst monthly losing streak since 2001. Bloomberg Economics predicts that India's GDP growth in the March quarter might be cut by as much as 50 basis points due to the market sell-off. And as a result, household spending could be further dampened by the wealth depreciation that follows. And this means that the government is under even more pressure to turn things around before presenting the budget on February 1. Chetan Seth, an Asia-Pacific equity strategist at Nomura Holdings, has said, I'm quoting, "The unbridled enthusiasm in India has faded a bit," he added. "There are clearly more investors now who are asking difficult questions, and there is a healthy debate as opposed to no debate earlier on the India story," quote unquote. The stock market and corporate profits in India were both bolstered by the government's strong emphasis on infrastructure development and the consumer boom post the pandemic. And as a result, the country was a favorite among global equities investors. The total value of firms included in the MSCI India Index reached a record high, increasing by about $2 trillion in just over 2 years. And just then, the growth story began to show signs of cracks. High inflation dampened demand in metropolitan areas, in addition to discouraging the central bank from lowering rates. Investors started to doubt if Indian stocks were worth the premium they were trading at, as corporate earnings started to decline. And for more on this, with us on the broadcast this minute is Jayant Krishna, Senior Fellow, Center for Strategic and International Studies, CSIS. Thanks very much for being here on the broadcast. Let me begin by asking you for your outlook on the upcoming budget and what major announcements are you expecting?
See, whether I'm expecting or not, that's a different issue. But I think if I were the finance minister, I would use this budget for a similar transformation as it happened in the year 1991 by the then finance minister, Dr. Manmohan Singh. See, the prime minister has embarked upon a very, very ambitious aspiration that, India should become a developed country by the year 2047. It's a good aspiration, but where's the roadmap? That's the big issue. I think if you look at what makes a developed country is the ranking on the Human Development Index, where our ranking currently is about 134 out of 193 countries which are profiled, kind of a thing. Look at GDP per capita. With just a GDP per capita of $2,698, our rank is 144 out of 194 countries. I think the budget has to really look at some very radical measures, much beyond the Manrega, the free ration, or the midday meal scheme at the schools, and so on and so forth. I think if this aspiration of the Prime Minister that India becomes a developed country by 2047, when we become 100-year-old post-independence, I think we have to look at the first and foremost healthcare. We spend just about 2% of our GDP on healthcare, which is less than half of what other, G20 countries do, Education and skill development, we spend little over 3%, but much less than 4%. I think this almost needs to be doubled, if we have to move up the value chain. So I think the finance minister must use this budget as an opportunity for course correction. You look at the research and development, we spend just about 0.64% of our GDP as against, and we are the lowest among BRICS countries, among G20 countries, even when compared to countries like, of course, US and China, but even Israel and South Korea, and Indonesia. So I think this course correction is very, very important to my mind. I think this, rather than some, tax announcements and so on and so forth, and some soaps being given. I think it's very, very important that I think the finance minister does some course correction. I'm not saying the doubling of allocation for health and education and skill development and research and development can happen overnight, but let this budget indicate a radical shift from the levels at which we have been operating. That's what my expectation would be from the finance minister.
Right. And speaking of expectations, according to you, how can the budget fuel foreign investor confidence in India's growth story?
I think, some reforms are very, very important. I hope and wish and pray that the finance minister includes that in the budget. Some of the key ones to my mind are, India has regulators in major sectors, but are those regulators really neutral? Is their functioning merit-based? I think which doesn't appear to be the case. I think we need to transform regulators in various sectors that we already have. And perhaps this budget could signal the introduction of the direct tax code, which was once introduced in the parliament but then withdrawn. Our legal system, the infrastructure needs to be strengthened. See, a lot of overseas investors feel that the contract enforcement process is not very robust in the country. So I think legal strengthening is very, very important. Trade policies, if you look at, we are negotiating an FTA with UK. The trade discussions are happening all the time with the US, with the European Union, Australia. We had an FTA some time back. So I think we have to rejig our trade policies vis-a-vis major nations. We have to expedite, disinvestment. I think these are the major changes to my mind, because the overseas investors, what you just talked about, if you really look at, they expect some kind of a regulatory certainty in the country. They don't expect, the rules of when they invest, there are certain rules, there are certain laws. But once the project is midway, then the rules of the game change, the laws change. So I think that certainty about regulation is very, very important, what they expect. And of course, I think through a prism of timelessness, we can keep talking about the ease of doing business. It has improved, surely, from a 100 plus rank to 63rd. But if we are the 5th largest economy, why shouldn't our ease of doing business also not be among the top 5 in the world? I think these issues are very, very important. Land, labor. I think some labor reforms happened, but we started well, but we didn't complete the process. Land reform, nobody wants to touch. Even the current government doesn't want to touch at all, which was introduced by the UPA government in 2014, or 13-14 kind of a time frame. So I think these are very, very important if we have to attract more FDI, because unless the domestic investments and FDI increases, job crisis is real in the country, as is there in the rest of the world also. I think if jobs have to come, investments have to come, and if investments have to come, the finance minister has to do whatever it takes to remove the roadblocks for FDI coming in, and the domestic, industry expanding and getting into newer areas. I think that is very, very important to my mind,
All right, we're leaving it there for the moment, Jayant Krishna. Thanks very much for being here on the broadcast.
Thank you.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.